Welcome to this video post from Fields Capital Strategies. In today's presentation, we will discuss safe and sound money management principles. And a safe and sound asset, as we define it, requires two fundamental specifications. It must provide guaranteed security or safety for your money, and it must provide guaranteed growth of your money. What we have discovered when we meet with most of our new clients is that the majority of their savings are unavailable because they are invested in qualified retirement plans, 401ks, IRAs, and such. Very few clients have money saved that they can get to when they need it. These qualified plans, you see, do not allow us to withdraw money until we are 59 and a half years old, unless we are willing to pay a 10% penalty plus the taxes that are due on the money for an early withdrawal of our money. And secondly, most of these qualified dollars are invested in the stock market, in mutual funds in particular. And if you have followed the market over the past 15 or 20 years, you know how risky that can be. If you had money in the market in 2008, you probably lost 35 to 50% of the value of your investments. Needless to say, the stock market and mutual funds are not safe and sound places to hold your money, and they do not meet our criteria of guaranteed safety and guaranteed growth for your money. And by the way, if you look at the compound annual growth rate, or the true rate of return for the stock market over the last 15 years, you will see its returns are below 3% per year. 2.28 for the S&P 500 and 2.94% for the Dow. So, why would anyone risk their retirement and savings for such small returns? Keeping the risk of the market in mind, let's talk about 3 guaranteed safe and sound places to keep your money. First of all, there are banks in various deposit accounts like checking, savings, money market accounts, or CDs. Now, your bank will not pay much for your money, anywhere from 0 to maybe 1%, depending on the type of account. But banks are safe. There's no risk. You won't lose your money keeping it in a bank. But secondly, there are annuities, the original retirement account written by life insurance companies. And annuities provide fixed growth and guaranteed lifetime income. So, an annuity meets both of our security and growth criteria for safe and sound money management. Then, the third safe asset for your money is life insurance. Cash value life insurance in particular, written by mutual life insurance companies that have been in existence for more than 100 years and have paid consecutive dividends for that time period, and that includes the Great Depression. Cash value life insurance is safe because of the companies writing the contracts, and then by contract there is a guaranteed return on your policy. So, let's begin a more detailed discussion of these safe and sound assets by beginning with life insurance and why it can be a safe and sound option for your money. Now, there are many types of insurance policies available. Most everyone is familiar with term life insurance, and most people own some type of term coverage. However, term insurance is not a safe and sound money place because there is no cash accumulation, no savings mechanism. Term is strictly a death benefit policy, and its name defines the type of coverage it provides. Death benefit for a period of time, or term. The term can be from 5 to 30 years. Term is also less expensive to purchase. And why, you might ask? Because you are renting insurance for the set period of time. And insurance companies have calculated that less than 2% of term policies written will ever have a death benefit paid on them. Now, term insurance is not a bad thing and can be very useful in your financial planning, especially for families with young children who will be probably living at home for 20 or 30 years. The parents of these kids should have life insurance in place in the event one of the parents passes away, especially the primary breadwinner. So this type of insurance can be useful. But with that said, term insurance is not an option for your money. There's no cash accumulation. So let's talk about something new to most people, which is one of the most powerful financial assets available that most people won't even consider. Permanent or whole life insurance. Specifically designed insurance to generate cash value. As with term, whole life defines itself by its name. Insurance for your whole life. For as long as you live, this policy will be in place, and when properly structured, it will allow you to accumulate large cash values, earning from 4 to 6% per year, all the while providing tax-deferred and compounding growth of your money. And it's guaranteed. When properly structured, these policies can pay you a tax-free retirement income you cannot outlive. Let me repeat that. A tax-free retirement income that will provide a sizable death benefit to your family that is also tax-free. A tax-free inheritance to your heirs. Now, think about that. 4 to 6% tax-deferred and compounding growth of your money each year that also provides a tax-free retirement income, plus a death benefit to your family. And all of this is guaranteed. Also, you have complete access to your money when and if you need it through policy loans. You loan yourself the money to, let's say, buy a car, and then you pay yourself back. Your money is continuing to grow and compound while you are using it for your needs. Now, you can't find a safe money investment anywhere with all those benefits. And by the way, one of the first mutual life insurance companies started in the United States was founded by Benjamin Franklin in the 1750s. This method of cash accumulation has been tried and proven for hundreds of years. Oh, and also, Do you know who are the largest owners of cash value life insurance? Banks. They own billions and billions of dollars of cash value life insurance. Now, do you think they, banks that is, may know something you don't? Moving on. A variation of cash value life insurance is single premium life insurance. Now, this type of policy allows you to leave money tax-free for your heirs and to provide for your chronic care needs at the same time. It can also almost double your existing estate and allow you to leave much more money to your heirs tax-free. Plus, if you need long-term care, it can provide for your needs in that situation as well. The last type of life insurance I want to mention as a safe and sound money place is universal life, specifically a fixed indexed universal life policy, purposely designed to accumulate cash. These policies can earn upwards of 15% or more each year without risk and without taxes. These policies calculate your interest based on the growth of a particular stock index, like the S&P 500 or the Dow Jones Industrials. They allow you to benefit when the stock market is growing, but you do not lose anything when the market is in a downturn, because your money is never in the stock market. The market is simply used to calculate the interest you earn. So, you can't lose a dime when the market goes down, but your interest can be significant when the market is going up. Now, let's talk about annuities for a minute as a safe and sound money place. Annuities are a great asset to roll your qualified money into, those 401ks or IRAs or such that you currently have in the stock market. I want to mention 3 types of annuities today. Number 1 is a variable annuity. These annuities invest your money in mutual funds, the stock market. Therefore, they do not meet our criteria for a safe money asset. You can lose your money if the stock market takes a downturn, so let's just forget about a variable annuity and let's discuss a fixed annuity. This is, as I said earlier, the original retirement plan. They have been available in America since the 1600s. They pay a fixed interest rate for the life of your annuity and then provide a retirement income you cannot outlive. And this rate is guaranteed. For example, Babe Ruth did not lose his wealth, even during the Great Depression, because his money, it was in annuities. When the stock market crashed and banks failed all over the country during the Great Depression, his annuities kept paying him interest each and every year. Now, third is a fixed index annuity, similar to the indexed universal life policy we talked about earlier. It calculates interest based on the gains of a particular stock index, like the S&P 500 or the Dow. This annuity allows you to earn up to 22% when the market is good, and you will not lose a dime when the market is down. You may simply earn 0 in those years. Now, if you want to participate in the stock market's good years, and not be hurt by the market's bad years, then this is a safe and sound asset, and you should consider moving your qualified money into a fixed index annuity. Oh, and by the way, you can earn up to a 20% bonus for every dollar you roll into this investment. For example, if you roll $100,000 from an existing IRA or 401k into one of our fixed index annuities, on day one, your account will be credited for $120,000, and your interest will be calculated on that amount. And after 10 years, you can start withdrawing your retirement income that will include the bonus and the earnings on your bonus. Now, an investment that can earn you up to 22% will pay you a 20% bonus up front, will never decrease in value, and provide you a lifetime retirement income that you can literally not outlive. Now, we call that a safe and sound asset. Now, let's talk about deposit accounts with commercial banks. You can keep your money in a checking or money market or CD with your local bank, and your money will be safe and insured and grow. But at what rate? Savings accounts pay less than 0.5% interest. Money market accounts less than 1%. And you might earn 1.5% on a CD if you're lucky. So, your money is protected in the bank, but you will probably earn very little. However, it is safe and it is sound. Now, I want to introduce you to a money management deposit account that we at Fields Capital Strategies are privately offering to our clients only. These accounts are currently paying 7.5% annual interest. And this rate, this 7.5%, is guaranteed for 24 months. These accounts now require a minimum account balance of $10,000. And there is no limit to how much you can deposit into your account. However, due to restraints from the institutional banks we invest with, I'm limited on what I can divulge about these accounts on this video. However, if you're interested, contact me personally, and we can discuss and talk more about these money management deposit accounts. If you live for the risk of the stock market, then safe and sound money practices probably do not interest you. However, if you lay awake at night and worry about your money in the stock market, or your family's financial future, or you worry about the load of debt you're trying to pay off, or maybe you worry about if and when you can retire and will you have the money to retire, then contact us at Fields Capital Strategies and let us talk with you about safe and sound money management practices. We can help put your mind at ease and allow you to have a full and restful night's sleep. Now, there is no cost, no obligation. Let's simply discuss your financial needs and goals. Thank you for watching this video post. Please, we ask you to subscribe, comment, share this video, or follow the link below to fieldscapitalstrategies.com for more information.